Welcome back to the Series 7 Study Guide, audio lessons for the Series 7 exam. As I've said in my last couple of podcasts, the Series 7 has greatly changed since October 1st. There is now a new Series 7 exam, and I am currently working on putting out that new Series 7 exam audio course. But now there is a new prerequisite to taking the Series 7 exam, and that is the Securities Industries Essentials examination. I've been working on this audio course for the last 2 months, and I'm glad to say that it is finally out. I will be posting sample lessons for the first 5 lessons for the Securities Industries Essentials examination, both in the Series 7 podcast website and also the new SIE podcast site. And that web address is siepodcast.com. So this is going to be the first of 5 sample lessons that I will put out here. If you would like to get 5 sample lessons more quickly than I put them out in the Series 7 study guide or the Series 7 podcast, then go to the SIE podcast and sign up for the email list, and they will come to you much quicker that way. The new Securities Industries Essentials Exam podcast is a total of 36 hours and 53 minutes. It consists of 58 audio lessons, which total 25 hours and 1 minute, and an additional 11 bonus episodes where we talk about the Eurodollar market, private banking, and other alternative investments, which are not really required but are good information to round out your knowledge of the securities industry. I'm glad to finally offer this to you. So if this is of interest to you, here's the first sample lesson, and tune in for the next several weeks as I upload the additional 4 episodes, which will give you a sample of the full 36 hours of lessons. Best of luck. Keep studying. Write me if you have any questions, Franz at series7podcast.com. Welcome to the Securities Industry Essentials Examination podcast, audio lessons for the SIE exam. My name is Franz Amison, and this is the introduction to this series of audio lessons for the Securities Industries Essentials examination. Well, first of all, let's talk about what the Securities Industries Essentials exam is. It is a new prerequisite effective October 1st, 2018, which is required that you pass before you are able to take many of the other qualifying examinations. The big change in the Securities Industries Essentials exam is that prior to what I'm going to call the SIE exam, Securities Industries Essentials exam, in order to prepare yourself to work in the financial services industry, you had to be associated with a member firm, a broker-dealer. You had to be employed before you could even take any of the examinations. This changes that. Now, in order to prepare yourself to work in the financial services industry, you don't have to be employed in the financial services industry. If you're 18 years of age or older, you sit for the Securities Industries Essentials exam. The Securities Industries Essentials exam is an examination of 75 multiple-choice questions. To take the exam, you have to pay $60 to the testing organization, and a passing score of 70 is required, 70% is required, and you have 105 minutes for the exam. Now, at the finra.org website, you can go on and register as an individual to take this exam. If you work for a broker-dealer or a member firm of FINRA, then they can go in and register you for the exam. Now, I've looked at the process for individuals to register for this examination, and I'm making this introductory lesson on October 19th, 2018, and hopefully this changes in the near future. But when I tried to go in and log in as an individual to take the exam, I kept going around in circles. So I don't think at this point in time that the FINRA website is quite ready for individual applications, but that should change in the near future. It seemed to take me in a roundabout queue. I kept going around and around and around in circles when I tried to register as an individual. So hopefully that changes. Now, when I started in this business in 1985, I had to sit for the Series 7 examination. And the Series 7 examination was the basic examination that anybody that was a broker that worked for a member firm, or I should not say broker, was a registered representative for a broker-dealer, because that's what we were called, registered representatives, had to pass a Series 7 exam. And I could not prepare myself in this industry. Now, I knew I wanted to be a stockbroker from the time I was in high school. So when I graduated from high school, I went to my personal stockbroker, and I said, what do I need to study in order to become a stockbroker? And he said, well, go to school, study economics and accounting, and get out in the real world and work and try to get some sales experience. And don't even think about coming into the industry until you're at least 30 years old, because people aren't going to trust you. You don't have any life experience if you're trying to do it as a youngster. And a youngster, he considered anyone in their 20s. And at that time, that seemed like an eternity for me to get to that point. Well, I actually did follow his advice. I studied economics and accounting, and I eventually passed the CPA examination, and I did get some sales experience along the way. So when I turned 30 and I said, okay, it's time to go to the next step, which is to apply for a job with a broker-dealer, every firm I went to offered me a job. It wasn't a problem for me to find a job. Now, getting a job in the industry is easy. Staying in the industry by getting enough clients to justify your salary or a decent income is a whole nother story. But that's a long ways down the road if you're just thinking of trying to work in the financial services industry. So at that time, when I was a young man, I did not have any opportunity of preparing except for going and studying in school what I needed to study. Well, now, if you're 18 years of age or older, in other words, as soon as I graduated from high school back then, I could have taken the Securities Industries Essentials exam, which would be a big leg up when I'm going to talk to a firm to hire me. Because now the Securities Industries Essentials exam covers almost all of what the Series 7 exam covered. So it's a pretty comprehensive examination. But in addition to taking the Securities Industries Essentials exam, to actually work you're going to have to take the Series 7 exam or one of the other qualifying exams. And it really depends on what area you're going to be working in the financial services industry, which exam you have to take. But at FINRA's website, there is a very extensive outline of the topics that are going to be covered in the SIE exam. So this series of audio lessons is going to be talking about what's required. And when I prepare a lesson, I'm going to point out at the beginning of the lesson what parts of the outline, which you're going to be able to download, that this lesson is going to touch on. Now, a lot of lessons are going to be touching on multiple areas of the outline of the SIE exam. So you're going to be reinforced along the way. You're not going to be taught something just one time. It's going to happen multiple times. And I find that's one of the best ways of learning. Repetition is one of the best ways of learning. Now, just like with the Series 7 examination series of audio lessons, I have to give you a caveat. These audio lessons will not prepare you 100% to take the SIE exam. In addition to listening to these audio lessons, you need to read your books, take practice examinations, attend classes if you can do it, and do everything else to prepare yourself. This is a supplement. These audio lessons are simply a supplement to try to reinforce what you're learning with other methods or to prepare you for learning in the other methods as well. Repetition is the key. Studying in multiple ways is a key. Visual, audio, reading, they're all required for you to pass the SIE exam. And the SIE exam should not be looked at as an easy exam. It's a very difficult exam. It covers a lot of material. There's 4 major sections that are covered in the SIE exam. A knowledge of capital markets amounts to 16% of the exam. Understanding products and their risks is 44% of the exam. Understanding trading customer accounts and prohibited activities is 31% of the exam. And the last part is the overview of the regulatory framework is 9% of the exam. Because understanding products and their risks amounts to the largest portion of this exam, we are going to start out with understanding products and their risks. But let's go through the outline and how FINRA has determined what you need to understand. Section 1 is knowledge of capital markets. And when I'm going through the lessons, this is how you're going to be finding out what I'm going to be covering in this lesson. Section 1 is just Section 1. So they have in the sections a section, then the subsection, then the subsection. So for instance, 1.1.1 is the Securities and Exchange Commission, the high-level purpose and the mission of the securities regulation. What is the definition, jurisdiction, and authority of the SEC? So that's all in section 1.1.1. So I'm going to read through this so you get a pretty good broad outline of what you're going to have to understand. And this is going to be pretty boring, but you need to go through this, and maybe you should also go and download the PDF file, which is available at the FINRA website for the outline of the SIE exam. So that was 1.1.1. 1.1.2 is self-regulatory organizations. What's the purpose and mission of SROs, which stands for self-regulatory organizations? What's the jurisdiction and authority of the SROs, such as CBOE, FINRA, and MSRB, and you will learn what those acronyms mean later on in the lessons. 1.1.3 is other regulators and agencies. What's the Department of Treasury, the IRS, the NASAA? What's the Federal Reserve? What is the Securities Industry Protection Corporation, SIPC? What's the Federal Deposit Insurance Corporation, FDIC? 1.1.4 is market participants and their roles, investors, broker-dealers, investment advisors, municipal advisors, issuers and underwriters, traders and market makers, custodians and trustees, transfer agents, depository and clearing corporations. 1.2 is market structure, and 1.2.1 is types of markets. Primary market, secondary market, third market, fourth market. 1.3 is economic factors. 1.3.1 is the Federal Reserve's impact on business activity and market stability, monetary versus fiscal policy, open market activities and impact on the economy, the different rates, such as the discount rate, the federal funds rate. 1.3.2 is business economic factors. The purpose of financial statements, such as the balance sheet and the income statement. Business cycles, contraction, trough, expansion, and peak. Indicators, leading and lagging indicators. Inflation, coincident indicators. Basic effects on bonds and equity markets, such as cyclical, defensive, and growth. Principal economic theories, such as Keynesian or monetarist. 1.3.3 is international economic factors, the U.S. balance of payments, gross domestic product, and gross national product, and exchange rates. 1.4 is offerings, the roles of participants, such as investment bankers, underwriting syndicates, and municipal advisors. Types of offerings, public versus private securities offerings, initial public offerings and secondary offerings, the methods of distribution such as best efforts or full commitment, shelf registration and distributions, types and purposes of offering documents and delivering requirements, for example, a official statement or prospectus, regulatory filing requirements and exemptions, the SEC and Blue Sky laws, Section 2 is understanding products and their risks. 2.1 is products. 2.1.1, equity securities. Types of equities: common stock, preferred stock, rights, warrants, American depository receipts. You need to have a knowledge of ownership, voting rights, what's a convertible security, and control restrictions such as Rule 144, SEC Rule 144. 2.1.2 is debt instruments: treasury securities, bills, notes, receipts, and bonds, agencies, asset-backed and mortgage-backed securities, corporate bonds, municipal securities: what's a general obligation bond and a revenue bond, and what other special types of bonds are out there. And then money market instruments such as CDs, bankers' acceptances, and commercial paper. You need to have a knowledge of maturities, interest, coupon value, par value, yields, and the different yields, and there's a lot of different yields in fixed income investments. What are the rating agencies? Call features. What are short-term and long-term characteristics of fixed income investments? And what's the relationship between price and interest rates? And negotiated versus competitive offers via underwriters and syndicates, and auction rate securities. 2.1.3 is options. What are the types of options? Puts and calls, equity versus index. What's hedging? Expiration date, strike price, premium, cash settlement, in the money, out of the money, covered versus uncovered, American versus European, exercise and assignments, the strategies of option trading, what disclosure documents are required, what's the OCC. 2.1.4 is packaged products, investment companies, such as closed-end funds, open-end funds, unit investment trusts, and variable contracts such as annuities. You need to understand what are the loads, the classes, the net asset value, what disclosures are required, what are the costs and fees, breakpoints, what's a right of accumulation, what's a letter of intent, net transactions, surrender charges, sales charges. A lot to cover there just in mutual funds. What are municipal fund securities? The 529 plans, prepaid tuition plans, savings plans, local government investment pools, ABLE accounts. You need to have a knowledge of mutual fund securities, owners versus beneficiaries, restricted use of plan assets, tax advantages, direct or advisor sold. 2.1.6, direct participation programs. What are they? And what types of DPPs? That's what they're abbreviated as, DPPs. Limited partnerships, tenants in common. You need to have an understanding of the pass-through treatment, unlisted, and they're generally illiquid as well. 2.1.7, REITs, real estate investment trusts. What are the types of REITs? Private, registered, non-listed, listed, real estate equity or debt, tax advantages, etc. 2.1.8 is hedge funds. You need to have a knowledge of minimum investments required, partnership structure, private equity, and the liquidity issues of hedge funds. 2.1.9, exchange-traded products, such as exchange-traded funds and exchange-traded notes. What are their fees? Are they active or passive? Are they an alternative to a mutual fund? 2.2 is investment risks. And this is just the one section, and it doesn't have it broken down by subsections. But you need to understand the definition and identification of risk types. What's a capital risk, a credit risk, currency risk, inflationary risks, interest rate risks, reinvestment risks, liquidity risks, market and systematic risks, non-systematic risks, political risks, and prepayment risks. What strategies would you use to mitigate risk? Diversification, portfolio rebalancing, or hedging. Then we get into section number 3, the understanding trading customer accounts and prohibited activities. And this is the second largest section of the exam. So 3.1, trading, settlement, and corporate actions. 3.1.1, orders and strategies, types of orders. What's the buy, the sell, the bid, the ask? The trade capacity, principal versus agency, long and short, naked and covered, bearish and bullish, 3.1.2 Investment returns. What are the components of the return? Interest, dividends, unrealized and realized gains, return on capital. Different types of dividends, cash or stock. The payment dates, record date, ex-date, payable date. The measurement of yields or investment returns. Yield, yield to maturity, yield to call, total return. What's a basis point? Cost basis requirements, benchmarks and indices. 3.1.3 Trade settlement. Settlement time frames for various products such as T, T+1, T+2. And the T stands for the trade date, and the +1 is trade date +1, so forth. Physical versus book entry. 3.1.4 Corporate actions. Types of corporate actions. Splits, reverse splits, buybacks, tender offers, exchange offers, rights offers, mergers and acquisitions. The impact of stock splits and reverse stock splits. The adjustment to securities subject to corporate action. The delivery notices and corporate action deadlines, proxies and proxy voting. 3.2 Customer accounts and compliance considerations. 3.2.1 Account types and characteristics. Cash, margin, options, discretionary versus non-discretionary, fee-based versus commissions, educational accounts. 3.2.2 Customer account registrations. Individual, joint, corporate, institutional, trust, custodial, partnerships, retirement accounts such as IRAs and qualified plans, and the types and characteristics of retirement plans. 3.2.3 Anti-money laundering rules. Definition of money laundering. Stages of money laundering. AML compliance programs. Suspicious activity reports. Currency transaction reports. FinCEN, and that's FINCEN. Office of Foreign Asset Control and the Specially Designated Nationals and Blocked Persons List. 3.2.4 Books and Records and Privacy Requirements. Books and Records Retention Requirements, Confirmation and Account Statements, Holding of Customer Mail, Business Continuity Plans, Customer Protection and Custody of Assets, Privacy Requirements, Non-Public Personal Information, Confidentiality of Information, Privacy Notifications, Safeguard Requirements. 3.2.5 Communication with the public and general suitability requirements. Communication with the public and telemarketing, classifications and general requirements, the do not call list, suitability requirements, know your customer, general requirements, what constitutes a recommendation. 3.3 Prohibited activities. 3.3.1 Market manipulation. Definition of market manipulation, types of market manipulation. 3.3.2 Insider trading, definition of insider trading. Definition of material non-public information. Identifying involved parties and the penalties. 3.3.3 Other prohibited activities. Restrictions preventing associated persons from purchasing IPOs, initial public offerings. Use of manipulated, deceptive, or other fraudulent devices, improper use of customer securities or funds, borrowing from customers, sharing in customer accounts, financial exploitation of seniors, activities of unregistered persons, falsifying or withholding documents, prohibited activities related to the maintenance of books and records. And then finally we're on to Section 4, the final section. The overview of the regulatory framework. 4.1 SRO, regulatory requirements for associated persons. And remember, SRO stands for self-regulatory organizations. 4.1.1 registration and continuing education. SRO qualification and registration requirements. Definition of a registered versus a non-registered person. Permitted activities of registered and non-registered persons. Ineligibility for membership or association, background checks, fingerprinting, statutory disqualifications, failing to register an associated person, state registration requirements such as the Blue Sky laws, continuing education requirements, firm element, regulatory element. 4.2, employee conduct and reportable events. 4.2.1, employee conduct. Form U4 and Form U5. What's the purpose and when are they updated? Consequences of filing misleading information or omitting information. Customer complaints. Potential red flags. 4.2.2, reportable events. Outside business activities. Private securities transactions. Reporting of political contributions and consequences for exceeding dollar contribution thresholds. Dollar and value limit of gifts and gratuities and non-cash compensation. Business entertainment. Felony financial related misdemeanors, liens, and bankruptcies. Well, that's the outline of what you're going to need to understand and prepare for taking the exam. In the next lesson, we're going to start down the path of preparing you for the exam. Best of luck in your studies.